Hey everybody, it's Jeremy here, and I want to talk about the volatility that we're seeing in the market today. Over 1,000 points of volatility in the Dow Jones. War with Russia, the Ukraine. Is it World War III? We're going to talk about that right now. Let's go. Hey everybody, it's Jeremy Whaley here from Trade Maestro. Sorry that I'm not any more together than a hat and a hoodie, but been out late with the family, and a lot of people over on Telegram are wanting some updates. We got some conversations going on, and I felt like I needed to get in here and do a video, but you know, it's pretty late in the day now, so I don't know when you'll see this, but anyway, that's why I'm just kind of throwing this together at the end of the day. I want to talk about what you're going to see here on the screen. Right there it is. I want to talk about this volatility we had in the market. Now, of course, a couple days ago, I sent out a video, and I told everybody that we would be seeing this volatility in the market. And we talked about dropping below our support levels, which we did on, let's see, today was Thursday. So I guess this was Tuesday that started happening. And Tuesday, Wednesday, and then Thursday, we had all this really, really bearish day, and then we rallied. Wow. And we actually ended the day up. In fact, the NASDAQ was up 436 points. So people are sitting here, they're sending me messages. Hey, what happened? I thought the market was crashing. What happened? Why is it up? The market was crashing. What happened? Folks, the market's crashing. That's what happened. Yeah, it is crashing. No, we did not have a bullish day. Come on, look at that. Just because the candle's green doesn't mean the day was bullish. Just because we closed up higher than we closed yesterday doesn't mean we had a bullish reversal. All we had was some volatility. And the way we got there was to first gap down. And before we can have that bullish candle that you see there, I got to change colors because I have these stinking red and green candles. Before we got to that bullish candle, we first had this big red bearish candle where we were way down here at 32.2. You say, well, what's special about 32.2? I'm so glad you asked. 32.2 just happens to be the price point. Look at that. Look at where my cursor is. I'm going to snap a line in there so you can see it very close. What? Yeah. We traded down intraday exactly to the turning point. Right there. See that? Right to that turning point. Now we're starting to get a little oversold. You're starting to see a turn. I don't think we're going to rally from here. We could. In fact, there's a candlestick formation that we're seeing forming right here. But probably what's going to happen is we'll have more volatility. We'll probably pound into this, and then we'll rally. Now, what did I say 2 days ago? I said we would sell off rapidly, and then we would bounce. So what happens if we sell off rapidly and we take a week before we bounce? What if we sell off rapidly and we go off to down here and then we bounce, as opposed to what if we sell off rapidly and we bounce in 2 days? It's the same thing. It's everything we talked about. It's exactly what I sent out on Tuesday. Tuesday morning, I sent out that market update. You guys can go back and reference it. Did a 45-minute workup on the whole thing that's been happening with the market since November. And said we were going to sell off. We would have a rapid sell-off, and then it would bounce. Now, the other thing I said, be prepared for a bizarre amount of volatility. And I said we're going to see 800,000 point days. And I've said this before. I'll say it again. I think we have a 2,000 point day. Now, a 2,000 point day does not necessarily mean that we're going to be down 2,000 points. 2,000 points is a 2,000 point swing in volatility on the Dow Jones. Today we had 1,000 points. So I'm talking about twice the volatility we saw today. Today was a very volatile day. But just because we closed slightly higher doesn't mean that we're not crashing. It doesn't mean that the sell-off is not happening. It's happening. If we come over here and we look at the NASDAQ, you see the exact same thing. Take a look over here. If I can get my mouse to respond to me. There we go. Now, if you look at this candle, somebody might think, oh, that's just so bullish. No, it's not just so bullish. We gapped all the way down here this morning before we rallied. So clearly this is a bullish trend. No, it's not. Just because we have a move, a counter move in one direction, does not mean that the bearish trend has reversed. It has not. Now, it is true that we see this candlestick, we see this formation happening at what we call a pivot point. It's at a support level. This is a price point where we could start to see that bounce. And if you go back to my forecast on Tuesday, what did I say? I said we would see this thing sell off. And I even think I said about the NASDAQ that we may not see a whole lot of selling because it has been leading the way. The NASDAQ was already at that primary pivot area. And I said, when we get there, we'll see a rally. And then it'll probably sell again. Okay, so this is exactly what I'm talking about, folks. What you see in the news is not real. Okay, just get it in your head. What you see in the news is not real. And I'm gonna cover some of that here in just a moment. I want to zoom out a little bit here on the NASDAQ. I want to show you ultimately, I think we will end up at a minimum around 12,000. But just because I say I think we're going to end up at 12,000 at a minimum, it does not mean it's going to have to happen this week. This is what happens this is what the modern media, McDonald's culture has done to people. It makes people think that, oh, the market's going to sell off and it's going to be volatile, it's going to be violent, and we're going to sell off 2,000 points or 5,000 points or 50%, whatever. And people think it's going to happen tomorrow. No, I said on Tuesday it's going to happen over the next 6 months. I didn't say it's going to happen tomorrow. I said it's going to happen over the next 6 months. But the pathway that we get there can be very volatile. And I'm going to show you some more of that here in just a moment. So don't think just because we had some green today that this thing has turned and that we're going to be putting in new higher highs here and we were just off. No, this is exactly the pathway. Let's come over to Bitcoin really quick here. Right now, as I'm doing this, almost midnight Central Time, Bitcoin's up 133 points. But look at the trend, folks. The trend is still bearish. Now, one of the things that is true about Bitcoin, I'll say this, Bitcoin traded down to my pivot area today, and then it bounced. That was my target. That was the exact target. We hit it, folks. We hit it. What do you want it to do? Hang out at the target and mull around and wobble in the mud until everybody's good and dirty? We hit the target. We hit the target. So I don't understand why people are saying, what happened? What happened? I thought you said it was all crashing. It is. It is. What do you think a crash is? And we're going to talk about that in just a moment too. But now, one thing I will say about Bitcoin is our stochastics is now oversold and it's starting to cross up. I think my hunch is, this is a hunch, there's no forecasting here. My hunch is we'll kind of settle into that 34,000 range, maybe get stuck in here a little bit. That stochastics will come back up into the middle, and then maybe we'll move on down to that 30,000 range. I still think there's a good chance Bitcoin hits 30,000, but we don't know yet. This could be the bottom, and I have been very consistent that 34,000 could be the bottom for Bitcoin. Okay, so we hit it today. We hit it. So I don't understand. I mean, I've gotten literally, I think I've probably got 15 messages or more saying, what happened? I thought you said we were crashing. We did. We did. I mean, today was an unbelievably volatile day. So let's talk about that. What is a crash? What is a definition of a crash? I think it's so funny. Crypto traders just blow my mind. And I love you. I'm one of you. But you get out on social media, you get on Twitter, you get on various social spheres, and the smallest little red candle, people are like, oh, it's a crash. It's a crash. And it can be right in the middle of the world's biggest bullish trend. They're like, it's crashing. Why is crypto crashing? And I'm just like, why are you overreacting? And then you have a green candle in the middle of a crash, and you're like, oh, wait a second. Russia. Why are there green candles? I don't understand. Folks, I mean, I don't understand. Look at the trend. Okay, I'm going to zoom in. This is the Dow Jones Industrial Average. I'm going to zoom in. We have sold off in the last 2 weeks. We started at almost 36,000 and we hit today at the low 32,000. That's 4,000 points in 2 weeks. 4,000 points. That's more than 10% in 2 weeks. If you go back to the peak, if you go back to the top of the peak here, 36.8, okay? That's 4,000 plus points here since the beginning of the year. And we just closed today at 33.2. Folks, this is 10%. This is huge. Okay? Now, we could get stuck here for a while. We can get stuck here. Most people, I don't even know what you guys think is a crash. I really don't. We're still somewhat in this topping pattern, but what we're starting to see, and this is what I was showing you on Tuesday night, what we're starting to see is this was the top here. There's your head and shoulders right there. We just dropped below the neckline. That was the break. That is the break of the pattern. That's what we've been watching for. This is the confirmation of a bear trend. But bear trends don't go straight down and bull trends don't go straight up. This is something I keep trying to say over and over, and I guess I just falls on deaf ears. People seem to have this idea that trends do this or that trends do this. They do not. Trends do this. And I'm going to draw this out again. Here's what's going to happen. There's your head. There's your shoulders. It's going to drop down. It's going to come back up. It's going to test it. It's going to drop down. It's going to come back up, test it. It's going to drop down. It's going to come back up, test it. It might squiggle a while, then drop down a little bit more. That's the way a bear trend works. This is not a 2-day trend. What we're setting ourselves up for is probably a multi-month trend. Okay? The crash that we had with the coronavirus where everything happened in 2 weeks, that's very rare. Very, very rare. Can it happen? It could happen. Could something like Russia, Ukraine trigger it? It could. So yeah, okay, it's possible we might crash in a 1 or 2 week period, but it's not likely. The way that this is going to shape out is probably exactly the way that it shaped out in 2008. Let's go back in time. Okay, we'll just jump in our little trading time machine here. Going all the way back. There we are. Almost. Where are we? There it is. Let's rescale it. Oh, looky here, folks. This is the biggest crash in recent history. Okay? This was 2007. Right here is 2007. There's your topping pattern. Look, it took from June all the way into July. Excuse me. June all the way into January of 2007 to complete that phase of the topping pattern. Then we confirmed it around the first of the year when we dropped below that pivot area. And then it took us another 3 or 4 months before we came back and tested it. And then here was the big crash from June, July of 2008 all the way through September and October, November, December, and into March of 2009. That's what a crash looks like, folks. That's what a crash looks like. Now, in the meantime, what's it look like? In the meantime, this is what people are seeing real time. This is what they're seeing. During a crash, what they're seeing, okay, the market traded down to 12,800 and then it rallied back up and it made a high. Oh, no, there it goes. It slows off and, oh, no, it rallies. No, there it goes. This is the way that it goes in real time. Okay? There was the bottom of it right there. That's the way it goes. So you have about a week or two of bearish progress with some sort of a rally or a bounce, a week or two of bearish movement, some sort of a rally or bounce. The most scary week of 2008 was right here. It was in October. That was the most scary week of 2008. That was the scariest week people, I think, have ever seen in the stock market. They're freaking out. In hindsight, you look back and say, oh, it's just a blip. Because that's the way it is. That's why I always tell people, you got to zoom out. You have to zoom out and see the big picture. Now, this time the market sold off from 14,000 to less than 7,000. It was more than a 50% sell-off. So let's come back to current time. Okay? Come back to current. Here, we'll stop on this little journey. We'll stop in the COVIDville. This is when the world decided to shut down because, the world was going to die if we didn't all go stay inside. So we all went inside. 2 weeks to flatten the curve. Well, what we did in 2 weeks to flatten the curve is we flattened the market. We did have a 50% sell-off. And then guess what happened? Right there. It took about 5-6 months before we regained it all. Okay? This is very rare. This was an outside event. This is a black swan. Is that what they call it? A black swan event. It was an outside event, and those turn into V-bottoms. That's kind of like a hurricane. Have you ever seen a hurricane? And, you look at like the coastline of the North Carolina or Florida or wherever the hurricanes come in, Texas, And when that hurricane's coming in for about a week or two, everything gets boarded up, everything stops. And then the hurricane goes away and everything goes back to business. This was a hurricane event. Okay? It was just a stop. Everything stopped for a little bit and then it came right back. Okay? That was not the crash. The crash was a true correction. That's what is on the horizon. That's what I believe is on the horizon here. And you're not going to see it happen overnight. You're not going to see it in 2 or 3 days. I don't think. I could, but it's probably not going to happen. What's going to happen is we're going to probably, I'm marking this out right now. Draw it out again. We're probably going to build support right here where we are. I think we hit it today. I really do. We may drop down to 30,000. Okay? We may come on down here. But I think it's roughly where we are right now. Either where we are or 30,000. And then it's going to come back right back to where we were. Right back at 34,000. And we call that the slope of hope. I talk about this all the time. That's the slope of hope that people buy thinking, oh, the crash was nothing. You know, you have all these people that are warning, oh, there's a crash. You know, run for the hills. The sky is falling. Chicken Little. And so, you know, people are freaking out. They think it's all going to happen tomorrow. And then a little bit of it happens and then it starts to rally. And guess what? People are like, oh, it wasn't so bad. And they start buying again. That's the slope of hope. They buy that slope of hope. And then as soon as that little bit of buying pressure works its way through, there's the next wave of selling. So here's what it's going to look like on the chart. Okay, it's going to rally probably to 34,000. Now it's possible, I'll draw this in a different color. The other variant here is that it could sell off maybe to around 30,000 and then rally back up to where we stopped today. Those are the two most probable things. And then once it has rallied, it will hang out for a little bit, anywhere from 1 or 2 days up to maybe 2 or 3 weeks. And then it will sell off again. And there's a good chance if the next wave happens like this, there's a good chance it rallies to the bottom here and then sells off again. And eventually, a minimum target for me on the Dow is right in here, somewhere between 26 and 28,000. That's the minimum I expect it to sell off. Okay, so when you look at that and you go back to, okay, we were at 36,000 and now we're looking at maybe a bottom of 26,000. That's 10,000 points. That's a 30% correction of the overall market. That's big, folks. That's big. It's not going to happen overnight, I don't think. It could. It's just not likely. Now, let's talk about war. Wars and rumors of wars and all this stuff that's going on. Look, I don't know what's going on over there. You really don't know either. You might, oh, I'm very informed. I've been watching the TV. Look, we don't know. We're not there. We're not boots on the ground. If you got a friend that's boots on the ground, maybe they can give you a better story about what's going on. Here's what I know. We were bearish on the market last November moving through, and I've been calling every corner of this reversal pattern almost, not precisely to the day, but within a week or so. We laid out the structure. We laid out the form. We knew exactly how this was going to form up, and we've been calling that. I always say this. I always say that news comes with a direction, not a price. The price is laid out by the structure of the market. The price is going to be determined by these support and resistance zones that I've been teaching you to build and to draw. That's the price. The direction is sometimes fueled by a news event, Russia, war. Yeah, okay, so that can fuel it. That might help us drive past one price point and maybe to a second one. Maybe we speed up a wave of behavior. But the structure of the market is not defined by news events. There's nothing about today's news that tells us that the market needed to sell off to 32,000 and bounce. Nothing told us that. But we did it. Why did we do it? Why did we sell off to 32,000 and bounce? Oh, because there's a pivot price there. That's where the behavior said we needed to bounce. So that's what we saw. So then you get into the day, and now the news media, here's what the news does. Event happens, market sells off, news event happens, news media correlates the two events. Market sells off 700 points as Russia invades Ukraine. That was the news headline. Later in the day, market's rallying. News headline has to change. Market turns positive as investors weighing reality of war. Events aren't connected. See, the news media is always associating events that aren't fundamentally connected. And then people come out and they're like, oh, well, this event has to change the value of the market. This event is going to cause the market to crash. Why? Why did that event have to cause the market to crash? The market was already moving. The market was already bearish. And this is what happens in every bear trend, almost every bear trend. Almost every bear trend brings with it a crazy news cycle that has nothing to do with the bear trend. The bear trend is already set up. It's already established. We're already overbought. We're already exhausted. The trends have already started to roll over. The topping pattern is already there. The momentum has started to roll over into the bearish side. And then suddenly there's the news event. That's like the spark that lights the fire. It was going to blow anyway, folks. It could have just as easily been, who knows? I mean, they can come up with an event. They will come up with an event. That's the way the news media works. And you have to understand the news media, they have no value in positive headlines. Their headlines are always negative. They have no value in positive headlines. So, I'm sure there was another story today. I don't know what it was, but it could have been a cheating scandal. I've seen this before. CEO of such and such company gets caught. Board removes him, market crashes. Those events had nothing to do with each other. Those things happen all the time. The media connects these events in ways to make you think that war was the thing that made the market sell off. It wasn't. It was the news story that helped fuel it. But the market was already selling. So I say all this to say, I'm going to try to keep this less than an hour. So 21 minutes, probably been talking too long. I say all this to say this. Don't get emotional. Don't get emotional, folks. Step back, zoom out, look at the market. The market's bearish now. Okay, great. Market's bearish. We broke the patterns. We confirmed the bear trend. We traded to the first pivot area. We bounced. Perfect. That's exactly what we would expect to see. That's it. It's exactly what we would expect to see. So now you say, well, how was I supposed to profit on that? It happened so fast I couldn't make any money. Well, if you want to make money in a day, you need to be a day trader. Okay, if you want to make money on a trend, you need to be a swing trader. I teach swing trading because that's what I tend to do. But if you want to be a day trader, you just swing trade on an intraday price range. That's it. And so if you look at this, let's do that real fast. I know you guys are, like today's society is all about the 10-minute video or the 5-minute, 2-minute video. In 2 minutes, we're going to get everything in. Baloney. You can't get everything in 2 minutes. Take a look at this, folks. This is a 5-minute chart. That means every candle in this picture is 5 minutes. Look at that beautiful bearish trend. And look at how we hit that pivot area and we put in a double bottom and we bounced. You want to know where this thing's going to go? I'll tell you where it's going to go. It's probably going to go back up to about 33.8 and then roll over. Or, maybe that's it, because you could also draw a trend line straight through here. Oh, I did that horrible. Excuse me. We could draw a trend line straight through here, maybe. Maybe we can. Hold on. Can we draw a trend line? Yeah, there we go. That's pretty close. You can draw a trend line pretty much straight through there. Maybe this is it. Maybe we just sell off from here. You see how that works? So if you want to have a true understanding of the market, you got to get a perspective of what time frame you're looking at. You got to understand that the path to get to an ultimate goal is not going to be the path that you want. Everybody's in this McDonald's society. They want everything like that. Boom. They don't want the market to crash as fast as they want my video to be done. Okay? It's not going to happen like that. It's just not the way it happens. And you guys have to be careful what you wish for. Some people are sitting here thinking, well, when the market crashes, then we're going to get other stuff that we want. Be careful what you wish for. Be careful what you wish for, folks. All right, so I hope this helps some of you. I hope it brings some clarity to you. It didn't bring any clarity because I just realized I wouldn't share my screen. That's annoying. How about we do this again? If you want to see it, I'll show you. I was looking at the 5-minute chart. Okay, there it is. See that? That's the 5-minute chart. So there's the trend on the 5-minute chart from the last week or so. Okay, look at this trend. This is the trend line that I couldn't get drawn, but you couldn't see me not getting it drawn because I forgot to share the screen. You see that? So we could sell off from here. Or maybe we rally up to this 33.8 and then sell off from there. But this is the new support. That's the price point right there. So pay attention to that. That's what we just hit. That's what we ran into. All right, folks. I hope this was helpful for you. I might seem a little irritated. I'm not really irritated. I do get passionate about this stuff, but I'm not irritated. I guess if I get irritated, I get irritated at the emotional roller coaster that traders seem so committed to be on, especially on social media. It's just, I've never seen anything like it, especially crypto. I've never seen anything like it. Just the emotional swings. It's crazy. Don't be emotional. Learn to be a trader. Learn to keep your emotions under control, and you're going to do great. All right, folks, if you want some more, if you aren't subscribed, get yourself subscribed. I got a button for that. Hold on. Where is it? There it is. Get yourself subscribed. If you're not subscribed, if you want to learn some more, make sure you're on my email list. Make sure you're joined up on YouTube, Facebook, or wherever it is that you're looking at this thing. And I will continue to do some updates for you, especially on the crazy days. I'm trying to get you an update video on the crazy days. All right, folks, thanks again, and we'll talk to you soon. Have a great Friday. We'll talk to you later. Happy trading. Bye-bye.